Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you're looking for investment opportunities, definitely click subscribe. Join our community. Let's ride this bull market up in commodities together. And I can tell you why through all these videos that I'm releasing, why I think we have a commodity bull market, why I think we're not going to go through this deflationary crash, and my opinions on it. And again, this is just my opinions. It's not. It doesn't mean that what I'm saying is a fact. It's not like I'm speaking in facts here because no one knows the future. But what we can do is we can look at history and we can say, hey, look, history tells us that when housing markets, crashes, it's a deflation. And what I've got behind me is the housing market. It's the housing starts. I'm just going to boom, see, poof, I'm gone. This is the new privately owned housing unit starts. And we've got the dark lines. See these dark lines right here? Those are recessions. Look what happens every single time before a recession. If you look before these dark lines before it, we had a declining housing starts. Every time we had these recessions, we had a declining housing start before it. Now, we have the largest single-family unit home deficit ever. It's at like 4 million homes. Now, how do I know that? There's two ways. Now, if you know simple math, and you were to draw a line across but right here, you draw a line across the area under this curve in here, all through here, needs to be built above the 1.5 million per unit home per year, above it to nullify that huge deficit of homes. Now, there's also articles all over the internet. If you guys wanted to search, you could just type in I think they usually say 3.8 million home deficit, right? And it says the U.S. housing market faces a 3.8 million home shortage. U.S. housing market is nearly 4 million homes short for a deficit. Now, if you look at the housing market floats everything. That's where that cycle kicks off other cycles. That's like the daddy cycle. The daddy cycle, the grand cycle, like the one that controls inflation, is what I'm showing you right here on the spread housing starts and the deficits. We haven't had a deflation with housing starts going up. It hasn't existed. They've all been on the downside of a housing starts. So housing starts isn't what's important. It's the real estate market and the drivers of that real estate market. The real estate market, if you want to see what the drivers are, you have to look at inventory. Inventory is your tell-all if the prices are going to go higher or lower. That is your supply-demand balance. If inventories are getting eaten and drawn down, prices are going to go higher of real estate, period. Now, I was just on YouTube and I was listening to all these people and they're like, the housing market, it's gonna crash, it's gonna do this. Not if you don't have any inventory of it. It can't crash. You can't have this blowout. You got to have inventory come. Somehow houses have to come onto the market. And if you've got 20 buyers for every single seller, we're not even close to a balanced market in housing. People are going to be dumbfounded when it goes up another 2 or 3x. You're going to say, how can these people afford it? That's not the right question. The right question is, where is inventory going to come from to relieve house prices? Big question mark. Where is that going to come from? Is it going to come from the lumber that's short? Is it going to come from the copper that's going to go to $20 a pound? We're short, guys. This market is screwed, and you could see it. Since 2011, we could see it. Go look at YouTube channel. His name is, what was his name? He's a real estate agent. He's been a real estate agent for like 40 something years. I watched him in 2012 or 2013, and he called this to the T. Like the entire market. He's like, 2016, we're going to run out of foreclosures. Once you run out of foreclosures in 2016, prices are going to start to move higher. Then you're going to run out of inventory. Your inventory is literally going to come down and down and down. And he was talking about home prices going up 7x from the bottom, 7 times from the bottom in California. So what's the bottom? The bottom was like, for some of these, was like $400,000 in some of these areas. He's saying 7 times 400,000. This money is in the system. This money is primed. It's in the banks on the reserves of M1, and they're going to flood the system. Because what are they going to do? Let inflation eat away their purchasing power of the dollars in their reserves? No, they're not going to do that. They're going to just say, lend it all out, get it out of there. And you're going to get more inflation. Guys, the gravity of this situation, of knowing this right behind me, right here, this housing starts, and that house prices are going to go up, and that they're going to start loaning like hell, knowing that means that we're going to have inflation. We've had it every single time in history when this housing unit starts goes up. I don't know what these people are looking at that say that housing is in like a bubble. It's not. It is not. And the reason it's not is right behind me. You can just look at that chart. You don't need anyone else to tell you anything. You have this one chart. And if you know that there's a deficit, if you know there's a massive deficit in housing, in real estate, prices have to go higher. They have to go higher. The only way that you can bring them down is through inventory increases. Where's the inventory going to come from? We're not building the homes. I mean, look, we are building more. We are in an expansion phase, but this thing's got to go vertical. I mean, we got to go way higher. We got to build way more homes. We're barely making any progress right now. If 1.5 million is the number, here, I'll move myself down here. We built 1.569 million in April of 2021. That's not even making a dent. You know how high home prices are going to have to go? Do you know how ridiculous it's going to be looking at home prices? I don't want it to be this ridiculous. The whole system in the mid 2000s, the early to mid 2000s, when they did all those stupid loans, screwed this whole market up. It screwed it up really bad. Really, really bad. They messed up. The government screwed up doing those government-backed loans. They really messed this up. I mean, they screwed it. They did so. This is so stupid. It's unbelievable what they did. Because all those foreclosures came out and it delayed the home builds. We should be building 1.5 million homes irrespective of home price. 1.5 million every single year. 1.5. Look behind me. Look at what's behind me right there. Here, I'll just... 1.5 is up here. We underbuilt a ton. This market is screwed. It's so screwed that people, they look at the price and they say, oh, well, we're in a bubble. They don't even know what's going on. You can look at this chart, bring it on up, and you can figure out the housing market in seconds. So apparently they don't know how to do that. I don't know why they can't do that. I don't know why these real estate agent people can't figure this out. It's not very hard. Now, this drives inflation. The banks, it drives lending. And it's coming. It's coming. This is going to have to be, we have to build our way out of this. And you know what? I don't think people are going to be happy living in apartments. I think they're going to spend the money and they're going to say, get me in a house. They're going to say, husband, buy me a house. I don't want to be living in a small little apartment with 3 kids. And that's the millennials. They're coming up. Now, everyone's going to say, well, how do they have money? They've got lots of money. They've got tons of money. Go look at all the stimulus that's getting put in their pockets. Go look at all the baby boomers that are passing away and handing down millions of dollars, handing down assets everywhere. That money is going to seek something. That all this inflation, all this money printing, all this garbage stimulus, that money's going somewhere. It's going to go after real goods in the society. It's going to go after homes. It's going to go after assets. And you know what? If we lose reserve currency status, game over. That money's coming back and it wants to buy something. And it's going to come back in a big way. So you're going to see massive inflation if we lose reserve currency status. And it's going to be money searching natural resources and products. That's the only two things it can really buy in assets. It could be stocks, it could be real estate, it can be commodities, it could be anything. It's going to search out for something. It's going to be either an investment, an asset, or a product, or a natural resource. That's it. That's all there is for final payments. And remember, dollars are a future repayment. That's all a dollar is. It's not like you owned something. You don't. The game isn't about owning dollars. The dollars are going to buy assets. They're going to buy products. They're going to buy natural resources. And that's why the price is going to go way higher. So hopefully this gives you a better understanding of where we're at in the real estate market and why I don't think that a deflation is coming. There's no way. And if a deflation, the real estate market leads the deflation. This is what drives it, not the other way around. Deflation doesn't just happen and then the housing market tanks. Did you know before the 1929 crash that real estate was in a huge boom in the mid 1920s? It crashed before that 1929 crash. It blew it all out. It was a big time deflation. And the real estate market was the leader. Go read up on it. It's very interesting. So hopefully you guys like this content. Give me a thumbs up. Let me know what questions you guys have in the comment section. Love to hear you guys. And thank you for listening. This is Finding Value.